Hello again, I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live. This is the Quant Edge 4-week coaching program, week 4, video number 2. We discuss the execution and risk management of our trades. As you once again read the disclaimer, after the first video, I know some people will be asking themselves, why are we using such tight stops? Whenever I've used tight stops in the past, I always get stopped out and things that will then go my way or what have you. It's very important to remember that you are now trading something you've never done before. You're trading something that is giving you a reason to believe the price should move immediately. When we combine what we know, we expect the price to move immediately. And that is unlike most things you've probably ever traded. Because of what we know about time frame continuity, because of what we know about the actionable signals, we are expecting things to go immediately, and if they do not, we want to be out of that immediately because we don't want to find out what's wrong. It also enables us to keep our losses extremely small. That's what we want to do, because when we combine the actionable signals, time frame continuity, and gauge magnitude with broadening formations, when we are right, we are looking to capture large moves. So in the last video, we got through the trade checklist. We always want to make sure in our minds, what do we know to be true about all of the universal truths before we execute. Right, then we went through the execution. Now we're going to go into some additional actionable signals on top of what we've already discussed. So now we begin with section 3, the additional actionable signals. Although we must always adhere to the actionable signals we have discussed, there are variations that also meet our criteria. Right? There's other ones that will still look at what we expect to go on. There's something I call a soft rev strat. Okay, and so other rev strats either occur by an actionable signal countering an inside bar or by recapturing an inside bar breakout in one bar, the one bar rev strat. However, the soft rev strat occurs when one side of the inside bar is breached and the open and close of that bar occur back within the inside bar's range. So what do we mean by that? If you take a look at this here, this is an inside bar here. Now it doesn't form a hammer or a shooting star countering it, but it did break the inside bar. Right? And what that means is there was an attempt to break that equilibrium and it has failed and comes back up. We're going to execute that like a rev strat right off of here. The good thing is you still have those 3 levels of stops and even 4 that we're looking to go off. However, it wasn't as powerful of an attempt. So oftentimes it won't be as powerful, but as long as we can combine what we know about everything else, we're going to respect that because it definitely attempted the actionable signal triggering and failed. Soft rev strat. Right? Once again, since the rejection of the inside bar's break is less violent than the rejection of an actionable signal, it's preferred to combine actionable signals with the soft rev strat. We always want to do that, right? But especially here, right? And almost especially in everything. But here, it wasn't as violent as a move. So we might not get as potent of a move. So not only do we want additional actionable signals, we want to see how that lines up with everything we know to be true in our checklist. The hammer counters shooting star. If a hammer immediately follows a shooting star, we adhere to the rules of the momentum hammer. The shooting star represents an potential exhaustion of shorts, as well as the influx of aggressive longs going into the highs here. And then as it counters back down, the hammer represents the exhaustion of the longs. Anybody got stuck up in here, blowing out, right? And anybody who got short in here could stay short. But once it comes back up, now it's countering his momentum hammer. Blow them out, and back within the original trend. So we, especially just like a momentum hammer, we're going to look for the shooter counters hammer. trade it as the momentum hammer, but we like these because that does show a blow off to the upside and to the downside, and oftentimes that will just resume. So we'll trade that as momentum hammer. Shooting star counters hammer, same deal. Now, because we've been in a bull trend, right? This is still showing as a bull trend. We would prefer this as coming from a downtrend. This example isn't an uptrend because a lot of things in an uptrend. We prefer those things to be just like the opposite of before. We saw it going down, right? Then hammer, then shooter, and then resume. But we're going to trade them this just like a momentum shooting star. But remember, we can look for the hammer shooter combinations to the upside or the downside and trade them as momentum. Right? Since countering signals are considered momentum, they trigger in the direction of the participation group control, preferably with full time frame continuity, allowing the trend to continue. Right? Well, that's why we like the momentum trades that are with it full time frame continuity. Now that we can trade them as long as the daily 60 in control, we prefer the full time frame because that shows us more probability of ill-timed people on the wrong side combined with natural buying and selling. The meaning of a sideways 30. Since most traders only gauge the 30-minute group off the top and the bottom of the hour and ignore tracking any the other 30-minute group, so any other ones, because that's how software draws it, the top and the bottom of the hour. However, since 15 minutes after the hour and 45 minutes after the hour also represent a 30-minute participation group, any price action that stays between the highs and the lows of that time period, you'll hear me call as a sideways inside 30. So when I'm going through on the VTF, if you hear me say that, that's what it means. It's still a 30-minute participation group, but you won't have a 30-minute bar that shows it, right? Because it's going from 15 after to 45 after. At the top of the hour, since we prefer to have the hourly update at the bottom of the hour, sometimes I'll call the ones that update at the top of the hour a sideways 60 just because we're not watching that. Some people software will and they will choose to use both, right? But that's what I mean when I say sideways. Both are still 30 and 60-minute participation groups, right? So that's still important. We still want to know about that. Section 4. The risk management of open positions. What are we going to do with these things once they work? Remember, for the proper placement of stops or level of defense, we refer to the trade checklist as well as the type of actionable signals we are trading. Since every trader's risk profile, account size, activity, time horizons are different, so should be the levels of stop protection. However, we do have a basic set of criteria in which to build from. Right? So things will change a little bit because some people are trying to do certain things and some people are trying to do others. Most importantly, we are not holding losing positions. That's one thing we're definitely not going to do. Longer term investments, we can use the universal choose to time longer term investments. And what does that mean? Some people will use this information to attempt to build a longer-term portfolio. So what we want to do is identify when might something have a much larger move, right, where you want to be involved for, who knows, could be decades so long as it continues your way. How are we going to do that? Ideally, what we want to do is we want to look for the monthly signals with the shorter-term combination. So you guys can see this here. This Western refining. This is actually done in the VTF. Inside month down in here. Now, if this is right, and this is the bottom of the broadening formation, it can go all the way back to the highs for all we know. What we want to do is we want to time that off an inside month, wherein once we find a way in there that it does never stop out, right? So even when you can have it bounce around in here or what have you, that your initial is always going to be at a profit. And if you are right long term, you can give it more room as it goes on because you're nowhere near your price. So once we time that to where the price stays above where you bought it, right? The actionable signal can exhaust so long as you bought it down here and exhaust. We don't have that anymore, but because people want it for long term for whatever reason they may have, so long as it doesn't do that, then what we can do is we can flip to a shorter term PSAR. So what is that? Once a winning position is established, the PSAR indicator can be used to follow the trend on the weekly basis. So PSAR is a parabolic stop and reverse. It was devised by a man named Wells Wilder. And it's much like a moving average. What it does is it follows the trend once it is established. So if you simply try and trade off these, you will get chopped up. What it does is it follows something that we already know to be true, that this inside month and up worked. Therefore, if that's going to continue, if you bought it here in the low 20s, down in here, now that flipped that PSAR, now this weekly starts to come up. Each week this will start moving up. And then as you get here, when it hits the blue dot, technically is where we would have a stop. Now, because you're still at a profit from here, when it triggers that, you don't have to get out immediately. You don't, because you've got that much room. Right? What you can do at that point is see what the conditions are on whether that we can have reason to believe that that was going to continue. And by that I mean it hits the dot which flips it up to here. Right? What that does is alerts you on a longer term time frame that maybe this thing is going to start correcting. At that point, you'll notice then it goes inside. All right? So we want to see if there's any follow through below here. All right? And at that point, you can also look at anything lower than that here, because you're trying to stay in this. However, should this go inside, what will it create? It creates an additional actionable signal to which you can buy more and add to your position here. If that works, the PSAR will flip back up and keep you back in, which you can then again follow to the next signal. But this helps you add to it. This helps you ride it. This gives you a point of inflection where we need to make a decision. Now, at this point, if this weekly is going to give us an actionable signal to the downside, which might, if it matches up with a monthly macro signal, you can choose to exit at that point. You can also flip to a monthly PSAR, right, which is much, much slower, depending on how badly you want to hold on to these. Now, remember, I prefer day trading. I prefer shorter term stuff because of the time value of money. I would rather make less in a shorter amount of time. So these are basic guidelines for people who would prefer to be doing this. Because what we're trying to do, just like on the shorter term things, is to create a winning position. Because once you do, then you have all these alternatives of, do I get out here? Do I add? Do I move my stop up? What do I do? Because once you're in a winning position, you can do that. You have that luxury. You have the luxury of keeping your stop even and saying, I don't care if it ever comes. If it ever comes back, it's nowhere near that now. And once it moves up, you can do that. But it is important to have a reference, and that's why we will flip from the monthly down to a weekly PSAR just to see how that intermediate term is going to go. Another thing we can do for the long-term investment, we also look at the larger macro time frames. So this is a quarterly chart. It can also be combined with the shorter term signals to create longer term investment entries. This is a quarterly chart of Tesla. Right now, this is RevStrat quarter to the upside. That gives us a lot more oomph. Not only does it help when we have periods of full time frame continuity to the upside for day trading, this signal is in force for 3 months. So long as the price is this, above that, this RevStrat is in force for 3 months. It's also important to know within 3 months you're going to have an earnings report. All right, and so you want to be aware of that. But by using these macro charts as opposed to just the monthly, this also helps to create these winning positions because it can give us the bigger picture. All right, the bigger picture of where things are going and why they're moving. Medium-term swing trades. So a similar method can be used for medium-term swing trading as is used in the longer-term investments. All right, so we can still use the daily or the weekly signals and then go down to the shorter PSAR. So if we have a weekly break to the upside and stays above that week, right, we can flip to a daily or a 60 PSAR so long as that's good and you don't get stopped out. That's fine. The price is still moving in your direction. If it does show a shorter term stop out on the PSAR, at that point you do not have to exit so long as you are still at a profit. You just need to evaluate what we are seeing at that point. Is it a tight range that ticks down? Is it giving us a shooting star back down? We can evaluate it, right? However, so for some people, once we identify a broadening formation, some will choose to just hold that until the pattern is completed. So this is one that just completed last week. Also caught on the VTF. And so what that means is, although this here is brutal, that is brutal to hold on to, and this, some people will identify these broadening formations, and if they get it down in here and it never comes anywhere near, we'll hold till completion. Doesn't mean there's not more risk on this, all right? But once you see how this stuff works, once you see these broadening formations work, some people will choose to do that. So if we go back to the medium-term swing, like I was talking about, discussing a few seconds ago here, if we take a look at this Palo Alto Networks, and you'll see once you get this weekly here, inside week, coming off the slight lower low, potential triangle, you can see the higher highs, the lower lows down in here, and it comes up into here. Some people will simply exit that. But as far as for the medium swing, when you're trying to stay in there, once again, flip to the PSAR. You can hold your stop even, right? Let the shorter term PSAR cross that price. It will. Because when this happens, the shorter term PSAR will be lower than your stop. Then as it moves up and crosses your stop, you move it up with it. Once again, then it hits here, but what happens? It goes hammer, all right? And then when this hammer takes it out, it flips the PSAR back up, which means at that point you could either still be long or add to it and let the PSAR go again, depending on how you're trading this. All right? Remember, these are basic criteria. Most importantly, with anything, we are not letting the price go against us. Right? So these are just strategies on how to look for the potential that they may come back on you. More importantly, is to look to add. Right? When we get that shorter term stop out, potentially we are looking to either exit or to add at that point. All right? Some people even choose to reduce because that lowers your cost basis immensely. Right? And then you can flip back to a monthly PSAR and let it catch up till the end of time. Because if you bought it here and you don't get stopped out on portion here, your leftover cost is way down here, right? And then you can let things play out if you so choose. Like I said, I prefer to be here every day and trading every day and using these for the VIX ETNs, but I know people are going to do this, and that's why we're going to discuss it. Day trades. Stop placement and execution criteria while day trading remains the same as discussed for the actionable signal setups, right? That comes down to risk management. It pertains to stop protection, progression, and maximizing profits by adding to winning positions. Right? Stop protection, progression is when you see those PSARs moving up. That's the progress. We're going to move them. We're not going to keep our stops sitting in one place. So at this point, we'll get back to the day trading as we conclude video number 2. So we're cutting this into shorter term segments so you can know where you need to, if you need to go back to any of this, you don't have to go through an hour video. You can just cut back to the individual one. All right, so this is going to conclude week 4, video 2 of the Quant Edge 4-week coaching program, execution and risk management. We'll be back with video 3 to move on through day trading a bit more.